about palladium, about gases. To make a chip, to make a wafer, it takes 600 different chemicals and gases to do that. And we spoke about how important perhaps Russia, or how they're looking through these sorts of geopolitical tensions. Just have a listen to what Sanjay Malhotra said earlier.
We have multiple sources of supply. We have multiple sources from US, Europe, and Asia as well. And we have long-term contracts with those other suppliers as well. So while we continue to monitor the situation carefully and certainly hope that the situation will de-escalate, we believe, based on our analysis, current analysis, that our supply chain with respect to noble gases is in reasonable shape. And of course, we will continue to work with our suppliers to make sure that our supply goes uninterrupted.
If Russia and Ukraine teach us anything, if COVID teaches us anything, is you need a more resilient supply chain.
Yeah, and I think this brings up the whole issue about our global supply chain, or whatever is left of it, basically kind of the breakdown. Really, if you want to be frank about it, really started several years ago here with sort of the deterioration in relationships with the Chinese. Then, of course, the COVID crisis hit, and now who knows what's going to happen with the Russia-Ukraine situation. But it's just a reminder that so many of the things that we depend on, whether it is the raw inputs or even the finished goods, of course, they are sourced somewhere other than right here in America.
And if any of this changes the way the Fed thinks about it, we know long term, of course, some of these geopolitical events don't have a major impact on the economy. You're still looking at a 2-year yield that's up 9-10 basis points on the day to a 156. Is it maybe a rethinking of how we're thinking about some of these inflationary effects that even the president said he's trying to limit from hurting the U.S. consumer?
All right, well, our discussion will continue in less than an hour's time for Beyond the Bell, when we have our cross-platform coverage continuing on TV, radio, and YouTube. We'll see you again. We'll take you through the market close on this Tuesday, 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Katie Greifeld in our Interactive Brokers studio. And man, we've seen quite a bounce back in the equity trade here.
Yeah, it is pretty remarkable. I mean, you're looking at the S&P 500 down just 0.4%. Carol, I don't know, there's an hour left in trading. Will it get there? Remains to be seen, but the direction of travel definitely strongly higher since we heard from President Biden.
I mean, I always think about the tone, right? Especially as we get closer to the closing bell, right? If we see selling into the close, if we see buying. And what is it that President Biden said specifically? Was this a sign of de-escalation, right? That we didn't see more stringent sanctions or moves against Russia specifically? So it makes you wonder, okay, what are the conversations going on behind the scenes to kind of figure out a much more peaceful resolution here?
Yeah, perhaps it could be a case of, buy the rumor, sell the news. The fact that, I don't know, perhaps the sanctions weren't the absolute severe that they could be. I mean, just looking across risk assets right now, you have Treasury yields also moving higher, just that haven bid that we were talking.
Right?
It is interesting. And I mean, it gets back to what we were saying in the simulcast, that, if the supply chains are so delicate right now, the Fed has to get control of inflation. That's the longer term look to take. And I mean, this Russia-Ukraine situation, if nothing else, it's going to just make those fragile supply chains even more strained. That means more inflation. That means more Fed tightening.
Right. We keep, the idea of transitory, which we know the Fed threw out that word, but nonetheless, there is still, I think, an expectation or conversation among FOMC members that this isn't going to persist forever, but it doesn't matter. In the meantime, the longer that it goes on, that it has an impact on so many different sectors, certainly on individuals and certainly on the growth that we see.
Yeah, and I mean, you're seeing that again reflected in markets. If I look at overnight swaps, I mentioned earlier that, that 50 basis point hike, bets on that had been eroded, pulled back a little bit. You are starting to see some more pricing come into that March contract. So we're hovering around 37 basis points. That's really a 50-50 toss for 25 or a 50 basis point hike in March. So I don't know. I just keep thinking about what Vince told us, Vincent Signorella, that this is a really, really tricky spot for the Fed.
It is. And we know that it's very clear when the economy is falling off a cliff what the Fed needs to do. When it's gangbusters and you clearly understand it's not in a situation where you've had trillions of dollars of stimulus put into the global economy, you're not coming out of a pandemic. Like, it's clear what the Fed needs to do. This is tricky. There's so many questions. All right, we're going to continue this conversation, continue to watch the markets, certainly on this. Meantime, let's also get back to world and national news. Lots going on. Nancy Lyons on it all from D.C. Hey, Nance.
Thanks, Carol. President Biden says the U.S. will impose the first wave of sanctions after Russian President Vladimir Putin recognized the independence of two self-proclaimed republics.
Who in the Lord's name does Putin think gives him the right to declare new so-called countries on territory that belong to his neighbors? This is a flagrant violation of international law and demands a firm response from the international community.
That response, according to Biden, includes targeting Russia's sale of sovereign debt abroad and on the country's elites and their family members. He says Russia will pay an even steeper price if it continues its aggression. The three white men already convicted of killing black jogger Ahmaud Arbery while he was running through a Georgia neighborhood have now been found guilty in their federal hate crimes trial. Travis McMichael, his father Gregory McMichael, and their neighbor William Roddy Bryan now face additional sentences and heavy fines. Ahmaud's father, Marcus Arbery, reacted following today's verdict.
I give all glory to God, and we got justice for Ahmaud.
During the trial, prosecutors shared text messages and social media posts in which the men used racist slurs and made other derogatory comments about blacks. The Supreme Court has agreed to hear the case of a Colorado web designer who says her religious beliefs prevent her from offering wedding website designs to gay couples. Lori Smith contends Colorado is violating her First Amendment protections with a law that bars businesses from discriminating on the basis of sexual orientation. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Katie Greifeld in our Interactive Brokers studio. So watching a few things certainly on this Tuesday, including while everything is going on in the world, and we're watching what's going on over between Russia and the Ukraine and the world's response to it. Meantime, feels like business as usual when it comes to Wall Street.
Absolutely. I mean, I feel like this comes out every single quarter that banks, they're increasing their bonuses paid to bankers. The latest headline comes from HSBC News Crossing that they're boosting the bonus pool by $3.5 billion, boosting bonuses by 31%. And I mean, it's a story we're all used to, that there is an incredible talent pool right now. It's incredibly competitive, and banks are having to pay up really across the pay spectrum.
Yeah, absolutely. And I guess when we hear these amounts, we're kind of blown away, but it's happening at Morgan, it's happening at JP Morgan Chase, Goldman Sachs. They receive bonus increases, at least for deal makers. M&A has been really hot. So those folks receive bonus increases of as much as 30%, 40%, and 50%. So we did see right when we went through the earnings, when you go through the balance sheet in terms of personnel expenses, it's been a lot.
Yeah, I mean, Goldman Sachs alone paying an average of 23% more per employee for last year. So just some incredible numbers there. And this HSBC story, it follows Bloomberg reporting from this month that some junior bankers at HSBC could receive bonuses worth up to 100% more than what they received last year. So that's junior bankers. And then more senior staff, they were expected to receive at least an average of at least a 10% increase in their bonuses. So again, it's across the spectrum. There's a lot of breadth here.
Yeah, there is. But it's certainly, in some cases, a big, big jump from a year ago. Hey, I have no easy segue, but I do want to mention something that popped up on the Bloomberg. Apple's flagship retail store in Amsterdam is in the midst of a hostage situation. This is according to local social media posts and a statement from the city's police department. Our Mark Gurman and Kagan Koch putting that out on the Bloomberg. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks are well off session lows. The Dow, the S&P, NASDAQ, to be clear, still in the red, but again, well off session lows. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure, but like you said, well off of session lows. Dow's down 328 points, was down 715. S&Ps are down 19, while the NASDAQ paring losses to 45. The U.S. 10-year yield at 1.95%. Gold is down 7. Oil is climbing. And Bitcoin is trading higher by 2.9%. Among the main 11 S&P sectors, only real estate, healthcare, and utilities are in the green. And leaders to the upside in the Dow, Amgen, and McDonald's, while Home Depot plunged as much as 10% after earnings and led to the downside. In other news, at his press conference, Biden says this is the beginning of a Russian invasion of the Ukraine. And in deal news, Cummins to buy Meritor for $36.50 a share in cash. Wrapping things up, Mosaic and Palo Alto Networks report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Carol Massar, Katie Greifeld. We are live in our Interactive Brokers studio here on Bloomberg Business Week. So one of the stories that definitely is a must-read today, it's also among our most read on the Bloomberg today. It has a line. It starts with U.S. businesses getting ready for long inflation. So let's get to it. Sean Donnan is Bloomberg News senior writer for economics on the phone in Maryland. Inflation. Sean, your story is so relevant, especially when it comes to our discussions about what's going on in the economy and what we might get from the Fed next. What are you guys hearing and what were you reporting on?
Yeah, look, I mean, we've all been hearing about higher inflation for some time now. And I guess when you start calling around to U.S. businesses and asking them what they're expecting, their answer is you should expect to hear about it for a little bit longer, maybe longer than a lot of people expect right now. And that's, this is the big question confronting the Federal Reserve at its meeting in March. It's going to get to work, and we're expecting it to raise interest rates. They've really telegraphed that. That's the beginning of a fight against inflation. But that's going to take some time, economists say. And businesses are still looking at this year and thinking they're going to have to deal with elevated inflation for some time.
And Sean, where do wage increases, the cost of labor, factor into this? Because that's where inflation can get really sticky, right?
Exactly. And look, so already we've seen, a lot of people calling last year the return of the power of labor. We saw those strikes at places like John Deere that yielded some big wage increases for workers there. But that's not over. If anything, that's building speed. And that's a big worry for the Fed, who worry about the kind of wage price spiral. In other words, that as higher prices cause workers to ask for higher wages, that leads to higher prices as companies try to pass on the cost of those higher wages and so on. I was talking to a guy called Brian Nelson, who works for an agricultural equipment parts maker called HCC. They're based in Illinois. They are a big supplier to John Deere. And you know what's going to hurt him this year, he says, is he's going into wage negotiations with the UAW, who just negotiated a new contract with John Deere, and he's expecting a lot of the same there. You talk to other folks, a lot of small manufacturers, and they're expecting to have to raise wages again pretty aggressively just to keep up with the competition and to get out ahead of inflation.
Sean, I can't help but feel, especially coming off the financial crisis, we were in such a period of low inflation for so long that we were all kind of shocked by it, right? And then I wonder, would we still be in that period of low inflation had we not gone through the pandemic, or were we starting to see signs that something was changing in our inflationary environment that was just different fundamentally?
Well, look, I mean, the big irony is that before the pandemic, the Fed was really hoping to get a little bit more inflation in the economy, right? We had this there was a hope that you'd get to run the economy. They wanted to run the economy a little bit hotter, and President Trump certainly made that point over and over again. He wasn't necessarily after higher prices, but he wanted faster growth. And we've seen that this time around with the response to the pandemic, the economic crisis side of the pandemic, that everyone has done their work to get the faster growth, and it's gotten this higher inflation that's there. And the big question now is how long that sticks around. One of the really interesting things right now, there's a really interesting note out from JP Morgan's chief economist last week, making a point that all of the models that we have now for inflation don't really explain what's going on now with inflation. And that raises a big question, and that is, are we entering a new era of higher inflation, or are we going to go back to what we saw pre-pandemic? And a lot of economists are betting that we're going to have higher inflation for longer, and that's going to have consequences for businesses and consumers and the economy as a whole for some time.
And if we are heading into that environment, I mean, you highlighted in the piece that for some companies, actually persistently high inflation, it's not so bad.
Right. I mean, if you're Walmart and competitors are charging higher prices, there's an argument and it's an argument that executives there make, that that's actually good for business. It draws more customers their way. We also talked to the CEO of the price comparison site, Trivago. He said, look, if people are spooked by higher prices out there, they're going to spend more time on price comparison sites looking for bargains. So there's always a little bit of an upside, but it becomes a grind for a lot of families, and that's something that we're going to have to get used to. Thinking just a little bit more about the purchases. I think a lot of people felt flush through the pandemic. They weren't spending as much on commuting. They were getting the government stimulus checks and so on, and they were spending that on goods or home renovations, and so on. We may be entering a period where we have to think a little bit more about what we buy.
Yeah, gosh, that's no joke. Hey, I do also love in your story where you talk about this HCC President Brian Nelson and how because of higher inflation, he had to put off his retirement because the board wanted this 70-year-old to stay on, somebody who understood an inflationary environment. Just got 20 seconds. I mean, we're seeing this, right? We want executives who understand this cycle. Just quickly, very quickly.
Absolutely. And Brian makes the point, look, I went through this in the 1980s, and I'm not freaking out this time because I've been through it before. He also does business in Brazil. And you know what he's doing? He's getting his people in Brazil to train these people in the U.S. on how to deal with inflation, and how to ask customers for higher prices.
All right, good stuff. Sean Donnan, senior economics writer at Bloomberg News, on the phone in Maryland. You're listening to Bloomberg Business Week. Carol Master, Katie Greifeld, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Master along with Katie Greifeld, and we're watching oil. It seems like the markets have steadied to somewhat, the energy markets, but...
It seems like, I mean, you look at the price of crude oil. It got to $96 a barrel. That was very exciting. Now we're all the way back down to $92. So, yeah, it definitely feels like we've settled down a little bit.
Got a 6.5% or 5.5% swing.
Sounds about right.
Yeah, okay. We'll get the details from those folks who are following me. We'll get to that in just a moment. In the meantime, back to your top business stories and a look at that trading day. And Charlie, just about 28 minutes to go.
Indeed, off-session lows still red on the screen, right to the numbers. Fast-moving markets, got to keep it locked into Bloomberg Radio, not only to see how things shake out at the close, but of course how Asian markets will react tonight. We've got complete coverage for you here on Bloomberg Radio. Stocks pared back some losses as President Biden joined allies in announcing a new tranche of sanctions on Russia after his counterpart Vladimir Putin recognized two separatist republics in eastern Ukraine and ordered troops sent to them. The S&P is now down 31, a drop of 0.7%. S&P have been down 82, down as much as 1.9%. The Dow now lower by 375, down 1.1%. NASDAQ is down 100 points, a drop for the NASDAQ Composite Index of 0.7%. 10-year now down 132nd, 10-year yield 1.93%. Spot gold down 0.3, 1,900 even the ounce on gold. West Texas Intermediate crude down 1.4%, 92.35 a barrel. Brent up 1.3% now, 96.67 on Brent. And again, West Texas Intermediate crude advancing today by 1.4%. We'll have more on the oil story coming up shortly. Energy prices surged with European natural gas leading the gains, up as much as a 13% rise, helped higher by Germany halting the approval process of the controversial Nord Stream 2 pipeline. Amrita Sen is Director of Research at Energy Aspects in London.
Putin has come out even just a few hours ago and said that gas supplies will be uninterrupted. And I think that has been one of the big fears in the market, whether because of either Western sanctions or because Russia decides to turn off both oil and gas supplies to Europe. But they have never done that before, including during the Cold War.
And today we are looking at oil stocks moving lower in the U.S. ExxonMobil, for example, down 1.3%, BP down 2.1%, Chevron down 0.9%, EOG Resources down 1.4%, Pioneer Natural down by 4%. Recapping, stocks lower, S&P down 27, down 0.6. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, well, oil, we did see it ease off earlier spikes, negotiations with Iran appearing nearer to a conclusion. There's a lot of things going on. We're also, of course, watching what's going on between Russia and the West in terms of supplies. So let's get to it. Bloomberg Markets correspondent Kriti Gupta back with us here in our Interactive Brokers studio, along with Julia Fenzeros. She's oil markets reporter at Bloomberg News. So, Kriti, I know this is a space you keep a watch on. We talked about it, I think, a little bit earlier. What is it that's been interesting in terms of the trade here?
Well, I mean, you guys know I love commodities. I also love geopolitics. Every time I come on this segment, I'm always have an oil chart.
You always kind of steer us, like, let's do this.
Well, you know, you're not alone. The poor guys on Boston radio say the same thing. They're like, oh, I guess we'll talk about it. But to me, what's interesting is I love commodities because it's kind of, for me, a little bit of a portal to kind of the rest of the world. Fun fact, the United States doesn't make a lot of things on their own. They don't have a ton of exports. They're a service-oriented economy. So when you look at commodities, it's a really great gauge on the countries around the world that are perhaps sparking a little bit of trouble. So naturally, our eye right now goes to Russia, to Ukraine. You can look at oil prices. You can also look at wheat, aluminum, nickel, palladium, if you want to get really nerdy. Don't ask me what you use it for, but there are a lot of commodities right now. And I think right now, on a risk-off day, we are seeing a lot of pain in the equity market, a lot of pain in the bond market. The kind of sole spots of green here across asset is going to be in commodities, which is interesting because not only is that kind of your geopolitical premium, but you also have your classic inflation hedge. Or oil, right?
All right, palladium, it's used in rings. We all know that. But apparently the largest use of palladium today is catalytic converters.
You know,
Cars.
it was just on the tip of my tongue, but
Was it? No, it wasn't. Julia, come on in on the conversation. You're watching these numbers in the movement. We've seen a fair amount of volatility.
Yeah, for sure. I mean, earlier this morning, as Katie said, oil hit $96 a barrel. And that is crazy because we've been watching these highs. And that's all based on the fact that maybe there was going to be sanctions on Russia. And what would that mean? That means that maybe it would be tougher for Russia to export oil because they're exporting oil, or for any of their country, for any countries to really get in business with Russia. And so that was the huge problem. But Biden spoke at 2 p.m. and he appeared to be avoiding the harshest sanctions on Russia. So that also helped cool down oil prices along with the Iranian nuclear deal.
I'm very happy to hear you say that, because Carol and I were batting around that theory that, okay, maybe these sanctions weren't as bad as feared. That's why you're seeing a little bit of a relief rally, at least in equities. But Julia, I am curious, you kind of, in your latest piece, you kind of lay out, there's two forces here. I mean, we've been laser focused on Russia and Ukraine and what that means for the price of oil. Like Kriti said, it's been green for a while now. But tell us about the Iran nuclear deal, because as you say, it looks that maybe negotiations have reached the end game.
Absolutely. So people and traders especially have been keeping an eye on this, because any extra supply to the market is going to be absolutely welcomed, because OPEC is not adding as many barrels as they are saying. They're not adding the 400,000 barrels a day. U.S. producers, they're not really being as tempted to ramp up. Yes, we're seeing some production, but any supply, that's going to be welcomed into the oil markets. And also you have this, buy the rumor, sell the news. Now that, Russia has been escalating, more traders are saying, okay, well, that was baked in last week, we're going to sell a little bit. So those things are really helping temper prices.
And I mean, something you hear all the time, that higher prices cure higher prices. What are you hearing from analysts? Is it broadly the same when it comes to the energy markets, to oil prices?
Absolutely. They've been
It's that basic supply demand, right? It's too expensive, right?
Exactly. But they're saying that it could get up to $120 a barrel. Wow. That $100 is not the stop anymore because of inflation, because there's still room to grow. So 120, keep an eye on that.
Yeah, I mean, it's just fascinating. We know how important. I do think about when we have these kind of geopolitical tensions that we all of a sudden pull out our charts of okay, so how much does oil, is contributed by Russia, and who are the major players? And, the Middle East, I feel like, has been on the side, but I mean, obviously an important player here, Kriti, when it comes to how they could impact pricing here.
Yeah, I mean, and we don't also know the other players that are involved, right? We don't know whether the Biden administration is planning on doing another SPR release. This is something that has come up in several negotiations. We had Jaron Bernstein on Bloomberg Television a couple weeks ago who said that's totally on the table, even though it is kind of seen as a short-term supply dynamic. That still does affect prices.
Plays well politically, though, I think, ahead of midterms.
Right, especially when you're worried about gas prices, right? Another piece of the equation is the shale producers. Is this finally the temptation, the level that they're finally going to kind of show up? But I think to Julia's point, I mean, you're seeing this in the options market. Big shout out to Javier Blas for tweeting this chart out. The options market is pricing it 150 and even higher. So that's going to be almost serves as a little bit of a magnet sometimes.
That would certainly get our attention. All right, Kriti Gupta, thank you so much. Julia Fenzeris, they're watching the energy markets for us. Right now, watching World and National News, Nancy Lyons. Nance, take it away.
Thanks, Carol. President Biden says Russia has begun its invasion of Ukraine, so he has begun to sanction Russia's access to world financial markets. Bloomberg's Irv Chapman with more.
The president announced what he called the first tranche of economic sanctions, which will ratchet up as the invading forces make their moves.
We're implementing full blocking sanctions on two large Russian financial institutions. We're implementing comprehensive sanctions on Russian sovereign debt. We've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade new debt on our markets or European markets either.
The president said more sanctions will target members of Vladimir Putin's oligarchic inner circle. He said he hopes he's wrong about his dire prediction and there's still time to avert the worst-case scenario. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. Attorney General says he feels for Ahmaud Arbery's family following the end of the federal hate crimes trial connected to his killing. All three white men were given guilty verdicts today for chasing down the black jogger nearly 2 years ago. Prosecutors used racist text messages exchanged by the men to make their case. Merrick Garland spoke after today's verdict.
I cannot imagine the pain that a mother feels to have her son run down and then gunned down while taking a jog on a public street. My heart heart goes out to her and to the family. That's really all I can say about this.
Attorney General Merrick Garland. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. So big bounce back when it comes to the equity market. Still down across the board, but man, looking a lot less risk-off-ish than we did, right? Just about an hour or so ago.
Yeah, and we'll see. I don't know. We have 19 minutes. The line can move a lot, Carol.
You're so right. Like, we'll see what happens as we get closer to that closing bell. Hey, in the meantime, a couple of car stories. First of all, gotta say, Charlie Pellet, I feel like he has this great crystal ball because he was talking about some people he knows, one individual in particular who's a dealer, I think sells Porsches, and was like, something happened with a bunch of cars lost at sea.
Oh my gosh, I love this
The Charlie Pellet indicator.
This reminds me so much of what we saw with, what was it, the Ever Given last year? Just another giant cargo ship. That one got stuck in a canal. That was a joy. This cargo ship, it carries about 4,000 Volkswagen vehicles. It caught fire last week. Turns out it could cost Volkswagen at least $155 million. That is according to one risk modeling company's estimate. Just a staggering amount of money, Carol.
Yeah, the ship is called Felicity Ace. It went up in flames off the coast of Portugal's Azores. Am I saying that right?
I think so.
Yeah, Azores Islands. The Russell Group saying yesterday it estimates that there are $401 million worth of cars on it. VW Group had Volkswagen, Porsche, Audi, Bentley, and Lamborghini models on the vessel. VW spokesperson declining to comment on the situation yesterday, but apparently they lost, I guess, a bunch of cars.
It's amazing. And I mean, these cars weren't headed to the junkyard, like you said. I mean, we're talking about Porsches, Lamborghinis.
They were headed to your driveway.
I would hope so, yeah. These supply chain issues, they just get worse and worse. But in any case, so Russell Group, it's modeling for the total value of the vehicles on board. So its cost projections assume all the vehicles are lost. And the company also estimates that auto manufacturers other than VW may have lost about $246 million worth of vehicles.
It is nutty. In the meantime, this is a story I might talk about when we join our TV colleagues about VW planning an IPO of Porsche. So we'll talk about that a little bit more later on. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a number of headlines involving the Ukraine-Russia situation. First of all, Ukraine's President Zelensky signing an order to call up reservists. Also, the United States is deploying 8 F-35 jets along NATO's eastern flank, also moving an infantry battalion task force to the Baltics, and the U.S. is sending 32 anti-tank helicopters to the Baltics and Poland. Again, those headlines crossing the Bloomberg moments ago. Stocks do remain lower with the Dow, the S&P, and NASDAQ on the minus side. Key takeaway, we're off session lows. At one point, we had the Dow Jones Industrial Average slumping as many as 714 points, down 2.1%. Right now, we have got the Dow down 464, lower by 1.4%. The S&P currently down 42, a drop of 1%. NASDAQ lower now by 148 points, down by 1.1%. And the 10-year yield 1.93%. Spot gold lower by 0.3%, $1,900 even the ounce. Big move for crude oil today. West Texas Intermediate now up 1.4%, $92.35 a barrel. Brent 96.63. Brent crude up today by 1.3%. Equities have pared back some losses as President Biden joins allies in announcing a new tranche of sanctions on Russia after his counterpart Vladimir Putin recognized 2 separatist republics in eastern Ukraine and ordered troops sent to them. Recapping, stocks lower, S&P down 42, a drop of 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The House of Representatives recently passed the America Competes Act, a nearly 3,000-page compendium of trade and industrial policy initiatives aimed at restoring U.S. economic strength and countering China's commercial power. The Senate passed a similarly ambitious measure called the U.S. Innovation and Competition Act last year. The U.S. Chamber of Commerce, which you'd expect to endorse efforts to strengthen American companies, indeed supported the Senate bill. But its letter criticizing the House bill makes for cautionary reading. The Chamber argued that so many market-suppressing initiatives are bundled into the Competes Act, it would actually wind up hurting American businesses rather than helping them. Congress is now attempting to reconcile the two sprawling bills. But it would be better to scrap them both and start over, this time with clearer and more limited goals. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just coming up on 10 minutes away from that closing bell on this Tuesday. It's a shortened holiday trading week, but nonetheless, it's been kind of a wacky Tuesday, to say the least, and of course, driven by geopolitical concerns. Our next guest notes that the S&P is down 10%. Maybe I think we thought earlier was about 11% from highs.
Yeah, we were definitely through it. Seems like we've bounced back a little bit.
Yeah, definitely. But the average stock, he noted, is down 20% or more. So let's get to it with Walter Todd, President and Chief Investment Officer at Greenwood Capital Associates, on the phone from Greenwood, South Carolina. Walter, so nice to have you here with Katie Greifeld and myself. So, all right, let's just talk about the day, first of all. A lot of volatility, it seems. We know where it's coming from. I don't know. How do you factor in a day like today into your longer-term thinking about the financial markets?
Yeah, well, good afternoon. Thanks for having me on. Yeah, you know it's going to be an interesting day when you pull up the old GIP on the Bloomberg terminal and you got 100 S&P points on the right-hand scale. So, yeah, it has been very volatile. It's a very fluid situation. I think it's important at times like these for us is just to kind of try to step back and look at, try to maybe dig in on some individual names and earning stories that we're still getting despite all these headlines kind of whipping things around. And I think it can present opportunities for companies maybe that have just reported that maybe don't have that much exposure to this situation directly that are getting caught up in this macro trade.
Yeah, and I mean, it's interesting to hear you say, you want to dig in on specific companies. I mean, Home Depot comes to mind because, man, their gross margins really didn't look too great compared to a year ago. I mean, zooming out and looking at that at a macro level, I mean, what does that tell you in terms of how companies are dealing with inflation, what the read-through into markets is?
Yeah, I think that's the quarters being reported, of course, for looking back are great, right? And to your point, though, looking forward, it's the guidance and the issues around the supply chain and what that means for margins in terms of the input costs, et cetera. I don't know. I'm not surprised that Home Depot's down on the guidance. I'm a little bit surprised at the magnitude of the move. I don't know why it was a surprise that growth was going to slow after 30% EPS years. But no, I understand the dynamic there, and I do think it speaks to a bigger issue. It's a combination of the input costs, but also the demand side is good, but it's moderating. I mean, let's face it, consumers are having to deal with a lot of other input costs themselves, whether it's gasoline, food, et cetera, that are going to kind of crimp their ability to spend on what they've been spending on for the past 2 years or so.
So how do we make sense, though, of the economic data? Is that fundamentally something that you think is important? U.S. consumer confidence dropping to a 5-month low on inflation concerns. So we see that playing out. Meantime, some decent, strong PMI data on the manufacturing and services sector. So, when we kind of get rid of all of the chaos and the static out there, I mean, fundamentally, what kind of backdrop is there for the U.S. economy?
Yeah, it's very, I would say, confusing at this point. I mean, aside from the geopolitical headlines, like you said, when you look at these various inputs, like you said, the PMIs, the market numbers this morning were pretty good, actually pretty strong. But then you look at consumer confidence. Conference board was okay, but the Michigan number, last week was, in recession territory.
Right.
And, some of these Federal Reserve surveys are weak as well. So it's very mixed. And again, I think it's important to go back to see what companies are telling you. And I would say that the message from management teams is not as dire as some of the macro headlines or data points that we're getting. It still seems pretty healthy. I would point to Walmart's quarter last week, which was pretty upbeat on their outlook, which is a little bit surprising, quite honestly. So I think management
Which speaks
teams
to the broader, right, a wider swath of the U.S. economy. Is that fair to say?
I would say so. Definitely, lower income kind of dynamic there, but still, again, the pretty upbeat message from the CEO about what they're seeing from the consumer. But again, it's just a lot of different cross currents here, flying from a macro standpoint that are moving individual stocks in the markets around pretty aggressively.
And those cross currents from a macro perspective, let's just walk through them. I mean, we have the earnings season. I mean, again, it was pretty strong, but you did start to see maybe some not so great news coming out from companies such as Home Depot. You have geopolitical tensions. You also have the Fed to worry about. And I would love to hear your perspective on how you think Fed officials are looking across the balance of risks right now. And I do want to point out the yield curve looks very, very flat right now, through 40 basis points on that very key 2s-10s curve.
Yeah, absolutely, Kate. It's a great point. And, it's funny, we're basically the same place on the S&P that we were in the first week of October of last year from a level standpoint. But you look at kind of the changes on the Fed outlook. Back then, there was 1 hike estimated for 2022. Today, 6. The 2-year was at 28 basis points. Today, it's at 153. So very different backdrop from the Fed's perspective. And I don't envy their position right now because the growth is clearly slowing. It's a question of how much is more permanent versus Omicron related, et cetera. But then at the same time, you got this inflationary event going on geopolitically, spiking energy prices, et cetera. So I don't envy their position, but I think they're going to probably go slow at first and then speed up if they have to, based on the balance of what we've heard from all the individuals, which is quite a bit of commentary, unfortunately, from the Fed presidents themselves, which creates even more confusion.
Walter, just quickly, just got about 30 seconds. You shared with us some notes about the S&P down 10-11% from its highs, average stock down 20% or more. Does that mean there's some buying opportunities in your view? And just quickly.
Yeah, I do. I think it's across sectors, and there's a lot of focus on technology that's been hit the hardest. But I think you can dive into individual sectors across the board and look at opportunities in healthcare, in industrials, in financials, and even energy pulling back here off of the oil move. So I think there are some significant opportunities, particularly on the cap scale. Smaller cap stocks
If you had
have
some
been hit harder than large.
Somebody gives you some new money, just 20 seconds. Where would you put it to work right now?
Yeah, so just some individual names that we hold that we find very attractive that have already reported: Dropbox, Cisco, Qualcomm, Intel, J&J, Biogen. Those are
all right. That's a pretty impressive
names
list.
that we own for our clients.
Okay, good to know. Love specificity. Walter Todd, thank you. He is President and Chief Investment Officer at Greenwood Capital Associates, on the phone from Greenwood, South Carolina. This, as we're kind of bouncing around in the last hour or two, definitely off our lows of the session, but not as bouncing back as we were a little while ago. All right, you are listening to Bloomberg Radio. Get ready for our cross-platform coverage.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are right now 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bells on this Tuesday afternoon. Here to help take us beyond the bell, it's our global simulcast partners, Carol Masser and Katie Greifeld, in for Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, $42.99 right now on the S&P 500. If that holds over the next couple of minutes, we'll be down 10% from that all-time high.
All right, so significant in terms of that move to the downside. I'm also been thinking about some of the day's economic news. Those inputs continue to be conflicting. Some strong PMI data, but some weak consumer confidence data, Katie, that kind of just keeps investors on their toes.
And I mean, you add that on to, all of the geopolitical tensions that we're dealing with, and you're looking at an S&P 500, every single sector is red right now, not even energy stocks, which have been kind of the saving grace. They are actually one of the worst performing sectors on the day.
Yeah, and I mean, look, when you talk about...
Interesting that energy, of course, has been Romaine. Interesting that energy has been a key outperformer of late, of course, within those supply chain headaches. And many now worrying about the geopolitics, what those gas prices do, what those oil prices do to some of the companies. The inflation's going to remain. That's what Macy's CEO told us. Supply chain issues going to remain, but he still sees a strong consumer.
Yeah, I mean, a strong consumer, and we've seen this before, Caroline. You talk about Macy's. I mean, we've seen some of the other retailers and some of the apparel makers, Ralph Lauren and a few others, really kind of surprised to the upside here in their most recent earnings reports. But there is kind of the question here of how long that lasts. Like, what's the price point where consumers decide, you know what, I don't need those pants, I don't need that car, I don't need that washing machine?
Well, and that is the big question as you think about how the consumer shifts to pivot to, well, maybe we're still buying some clothes, but are we not willing to buy double the price of avocado guacamole, Romaine? These are all sort of the big questions as you're looking at a market severely under pressure.
Yeah, severely under pressure here. We've been under pressure now really going back towards the end of December here, a market that really has been lacking conviction and to a certain extent lacking any sort of upward direction. The Dow Jones Industrial Average is going to finish the day down by about 1.4%. The Russell 2000 is going to finish the day by a similar amount, and the NASDAQ Composite is down 166 points or 1.2% here. More importantly, though, the headline of the day right now is that the S&P 500 again falls 10% below that January 3rd all-time high that it most recently hit. It is now down 10.25% to be specific here after a 1% decline here on the day.
All right, so back to levels on the S&P 500 from where we were back in October, which makes you wonder. We've seen a lot of movement around there. I mean, one thing, and we say this a lot, Taylor, is the one thing we can really kind of count on is a lot of volatility here.
Indeed. Let's just highlight this, Romaine, because I think you do such a good job of putting the size and scope of the numbers and the charts that show the numbers. That 10% correction, this is it, right? This is the latest drawdown from the S&P that we've had from some of the latest highs. More than 10%, which is all great, except that is the first time this has happened since March of 2020. So that really highlights some of the uncertainty just a little bit that's underway, as it was just really the beginning of this year when we were at some of these fresh record highs. As we do for our audience every day, we're going to try to flip up the board live on air and go to some of the individual sector levels that we do, some of the winners, some of the losers. I hate to say it, Carol, but even the winners, there's only one green on the screen. It's up 0.2%. Hardware equipment, some of of those services index, but everything else is red on the screen. Take you down to the bottom. It's technology, it's durables, it's retail, it's auto, it's energy, it's food and retail. This, Romaine, is what I might actually classify as a broad-based sell-off when there was really hard to find a safe haven anywhere.
Yeah, interesting to see energy, too, under pressure, because that has certainly been a standout in the markets. Let's get to some of the standouts, the specific names that actually gained in what was a risk-off trade today. Volkswagen among them, a special situation. That stock up about 2.1% here. Planning a Porsche IPO. This is to help VW's valuation and also give it some money to fund really its push into EV. So that was a gainer in today's session. Also another special situation. Top in the Russell, we saw Meritor, Cummins to buy Meritor. The deal was a $2.6 billion deal. And this is again having to do with having more access to technology and stuff for the EV area. And then just want to mention top in the S&P 500 and the NASDAQ 100, Kraft Heinz boosting its long-term growth targets, and that stock was up about 5%. Meritor up almost 44%. What, Romaine?
I got a pop quiz for you, Carol. When you go back to that January 3rd high, and you look at all of the stocks that have declined in the S&P 500, what do you think the best performing stocks are in the S&P since that January 3rd high?
Oh, that's financials?
All energy.
All energy.
Marathon, Schlumberger, Occidental, Hess. Those are your top 5.
Why do you bring that up? Because especially when we see a day where we see, energy among the laggards today.
Yeah. Interesting, yeah.
I know.
Katie?
I guess I should go ahead and talk about my decliners.
Yeah, just jump in here. This is a free-for-all here.
Okay,
don't let me knock you off track.
Well, I came prepared in any
case.
case.
Carol's used to me. She just punches back. You can't take the bait. Just
I'm from a large
Okay,
family.
well, let me very politely proceed with my decliners. We were talking about consumers earlier, so we were going to hit... Very professional. And we're going to hit on Home Depot because they reported earnings and higher costs really hit into margins. You had prices increase, the cost of sales also increased. You add that together and gross margins actually fell from a year earlier. Home Depot shares, they fell almost 9% today, and that even spooked Lowe's. So Lowe's reports tomorrow morning, but even still you saw shares fall 3.7% today, and traders really wagering that Home Depot's problems, they're probably going to be Lowe's problems as well. So Lowe's couldn't catch a break. And I do want to end on Tesla because it was just one of several automakers dropping today. And that all comes back to supply chain fears, the Russia-Ukraine situation. For example, if you look at nickel, we were talking about that earlier, it's very much used in making EV batteries. Nickel prices have been soaring. That is bad news for Tesla. Shares closed over 4% lower.
I talked to you about what else is soaring. We have to do a 2-year yield. You're up 7 basis points on the day. Typically, this actually would be a big rate of change kind of day, but we've seen these 10, 11 basis point moves actually pretty frequently this year. But we're up to a 154 here on the 2-year yield. But yields on the long end, 10s out to 30s, are flat to even falling. And what this means is further flattening of the yield curve, just 38 basis points now on the 2s, 10s. And, Carol, it comes as we're getting comments from Raphael Bostic of the Atlanta Fed saying that, he's not seeing anything to indicate a recession. He doesn't see a contraction, but maybe a slowdown. And that is also what our guests on this program have told us about what 38 basis points on that 2s, 10s is signaling.
And I think that we're getting comments, of course, from Raphael Bostic when we think about what the Federal Reserve might or might not do and how much we're seeing. Look, not talks of a recession. We are having a lot of geopolitical angst. We are worried about what higher energy costs, what higher gas costs are really going to do to the consumer, what they're going to do to the overall business environment. But right now, the Federal Reserve, might not hike 50 basis points, but they're not calling for any sort of pullback in economic growth just yet.
Well, I'm going to just jump in here in terms of I feel like we're hearing much more when it comes to recession talks. And what does that mean if the CEOs, I feel like, who have been able to push, ahead price increases, who've been able to raise wages and bring in workers, but does that potentially slow down some of that momentum, and how does that ultimately kind of hurt us longer term?
Yeah, and I mean, we kind of, didn't talk about this a little bit earlier, but of course the news out of the Bundesbank and Germany tipping into recession here. Some people kind of shrugged it off because it was obviously maybe a little bit of an anomaly, but you wonder, is it an anomaly or is there sort of a broader global trend? Maybe it doesn't hit the U.S. quite as hard, but globally here, you are seeing softness.
But I do wonder, though, if consumers are pushing back, because we've gotten the comments, and Caroline can speak to this a lot more coming off the great interview with Macy's, that consumers aren't pushing back just yet. You could argue with Home Depot as well. The tailwinds in spending on the house, they haven't pushed back just yet, but you do wonder when that happens.
And he felt the consumer's strong, but not seeing international travelers quite yet. That's an area that's still weak. But really, I thought what was front and center from both the Macy's CEO, but also the CEO of Micron, is supply chain headaches are here to stay. We heard the chip sector really talking that 2022 was going to be the pivotal year of change. They're having to push that back a little bit. And we certainly heard from Jeff Gannett at Macy's, who's saying, look, the supply chain woes, they're not going anywhere anytime soon.
And in thinking about the consumer and thinking about those supply chain woes, I think it's going to be very interesting to get those University of Michigan consumer inflation expectations because, again, the narrative until now has been, okay, the consumer is miserable, but they're still spending money. It's going to be very important, I think, to get a read on what they're thinking in terms of inflation.
Well, I'm glad you brought that up, too, because, I mean, obviously this is going to be a little bit backward looking, but you have to wonder that when you start to see all the news headlines about Russia, Ukraine, and just how that factors into sentiment overall, and whether that changes people's perspective as to what they spend or whether they spend it all and what they spend on.
It didn't so far. Conference Board consumer confidence came out this morning. Little change, but 110.5 in January. Present situation slightly up, and one-year inflation expectations 7%.
Wow.
But this isn't going to stop,
And I think
Carol.
to your point, Romaine, you were saying this so smartly, weren't you, that you know, yes, we're seeing people continuing to buy, retail sales looking strong, but are they actually just having to buy less, but at a higher price point? And how much of this shadow inflation that we've started to talk about is really creeping in here?
Yeah,
All right, so how many questions did we just do right now, right?
I don't know. Would you like another one, Carol?
No.
We can go all day.
Do you have
could
another
extend
one?
this.
Do you have another one?
I do, actually. I mean, seriously, when we talk about shadow inflation, and we're going to do a whole show about that, by the way, Carol, on Triple Take coming up. But, you know, the whole idea here is that if people aren't spending, or people decide that they are afraid of what's going on, whether it's inflation, whether it's geopolitics here, do they pull back the spending? Do they look at the prices on the menu and say, that's just too much, we're going to eat at home, or the price is out at their retail store, and decide that they don't need to make that purchase just now?
Or do people not get worried as long as they feel confident about having a job and they still feel like, you know, they can see that longer term? I don't know. We just had a lot of questions, and I feel like this is what the Fed faces every time they get together for an FOMC meeting.
Well, they're going to start that meeting 3 weeks from today, Carol. Should we send them these questions?
Should we what?
Should we send them these questions?
I think we should.
Okay.
We should tweet at them.
I'm sure they would appreciate it.
All right, we got to go. We will see you again,
See you,
same
Carol.
time, same place tomorrow.
Katie,
Our
too.
cross-platform coverage, yes, Beyond the Bell on TV, radio, and YouTube.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I think that was actually really funny that we had so many questions. It's like, what if?
I think it's a really good reflection of the state of everything right now. Everyone has a lot of questions. I mean, you can see it in the intraday chart of the S&P 500. Everyone has questions.
Exactly. All right. Also, lots of questions when it comes to world and national news. Here with an update on that, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden is taking steps to punish Russia for recognizing the independence of 2 breakaway regions in eastern Ukraine. The president says the U.S. will impose sanctions on Russian financial institutions, sovereign debt, and the country's elites, whom he say share in the Kremlin's corrupt policies.
He directly attacked Ukraine's right to exist. He indirectly threatened territory formerly held by Russia, including nations that today are thriving democracies and members of NATO. He explicitly threatened war unless his extreme demands were met.
Biden says he's sending an unspecified number of additional U.S. troops to the Baltics in a defensive move to defend NATO countries. The 3 white men convicted on state charges of killing a black jogger have now also been found guilty of federal hate crimes charges. Father and son Greg and Travis McMichael and their neighbor William Roddy Bryan chased down Arbery, believing he trespassed inside a vacant home. Wanda Cooper Jones is Ahmaud's mother.
Ahmaud will continue to rest in peace, but he will now begin to rest in power.
Wanda Cooper Jones says she always believed the court would rule against the defendants. Their attorneys contended the 3 did not kill Arbery because of his race, but prosecutors displayed around 24 racist text messages they'd shared. A legal victory for the U.S. women's soccer team. Members have reached a settlement with the U.S. Soccer Federation over their discrimination lawsuit that awards them $24 million and equal pay to their male counterparts. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Carol Masser, along with Katie Greifeld, here in our Interactive Brokers studio. And one of the stories that definitely caught our attention, this is by Greg Farrell and Patricia Hurtado. The star witness in the bribery trial of former Goldman Sachs banker Roger Ng.
I was hoping you were going to say that.
Roger Ng. Okay, just want to make sure I had that correct. Describing the lengths to which they and a tight circle of Goldman partners went to loot billions of dollars from the Malaysian wealth fund 1MDB. This story, the more we get to know about it, it's kind of uncomfortable.
It's kind of uncomfortable. But, you know, the fun part of these kind of trials is you really get the inside look. And in this case...
Of what really happened?
Yes, of what really happened, the real TikTok of what happened. And in this case, we learned that in order to obscure the role of Joe Lowe, now a fugitive, in the fundraising efforts for 1MDB, a number of code names were created, including Friend and PMO. That was for the Malaysian Prime Minister's office.
Right. Tim Leissner telling the jury today. Leissner is the former chairman of Goldman's Southeast Asia business. He testified that he and his subordinate Ng, along with senior Goldman officials, including Andrea Vela, the former co-head of investment banking in Asia, used the code name to conceal the extent of Lowe's involvement in the fundraising projects from other partners at the bank. We know Leissner has pleaded guilty to money laundering and bribery of foreign officials, and this is what this is all about. Ng, the former head of investment banking in Malaysia, charged with conspiring with him to launder money and violate U.S. anti-bribery laws. He is the only former Goldman banker to go on trial in this scandal. But this is what it's all about. Bribery, right? A sovereign wealth fund and all of the kind of machinations that were going on.
And it's wild. Leissner himself said that had we raised his name in his true capacity, it wouldn't have been approved. It would have been a red flag and it would have stopped the transaction. So they knew what they were doing, obviously.
Yeah, absolutely. Anyway, read the whole details if you want. Just go to Bloomberg.com or check it out on the Bloomberg terminal. You are listening to Bloomberg Business Week.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A down day on Wall Street and lots of earnings reports after the close of trading. Let's get right to those. Palo Alto Networks out of Santa Clara, California. Shares are higher after hours. We do have Palo Alto Networks seeing third quarter adjusted EPS of $1.65 to $1.68. Estimates have been for $1.64. Also reporting second quarter billings growth up 32%. Estimates for the increase were for a gain of 25%. After the bell, Agilent boosting its adjusted earnings per share forecast for the full year up by 0.8%. And just getting word from Virgin Galactic, it is reporting revenue for the fourth quarter that missed the average analyst estimate, but shares of the company that uses the ticker SPCE as in space up now by about 5.5%. Turned out to be a down day. Stocks fell, entering correction territory for the S&P as President Biden joins allies in announcing a new tranche of sanctions on Russia after his counterpart Vladimir Putin recognized two separatist republics in eastern Ukraine and ordered troops sent to them. The S&P down 44, lower by 1%. The Dow down 482, down 1.4%, have been down as many as 714. NASDAQ down 166, down by 1.2%. 10-year yield 1.93%. Spot gold down 0.4%, $18.99 the ounce. West Texas Intermediate crude up 1.4%, $92.35 a barrel. Brent 96.35 up 1%, and Bitcoin up now by 2.4%, 37,975 on Bitcoin. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Katie Greifeld. And the pandemic really taught us big time the importance of connectivity. And for many of us, I think, Katie, it's safe to say we were kind of shocked at how well it worked thanks to advancements in technology. Like, it's amazing what everybody was able to get done.
Yeah, absolutely. I mean, it felt like life as we know it moved online for everyone, for workers, for students, for everyone.
We did okay.
We did okay. We're doing okay.
Not perfect, not equal, but still impressive. Back with us and working on creating the connected campus is Transact Campus CEO Nancy Langer. She joins us once again on the phone in Phoenix, Arizona. Nancy, nice to have you here with Katie and myself. How are you?
I'm good. How are you, Carol?
Doing okay. Managing through and just trying to, take in everything that keeps continuously being thrown at us. So remind our audience about what you are up to and specifically how you're doing it.
Yeah, so Transact Campus, we're really in two different business lines. One is payments, both tuition payments as well as non-tuition payments on higher ed, generally higher ed campuses. So we have the software that handles really parents or students going in to make all of their tuition, room and board type payments, integrated deeply into the university systems. And then we have on campus things like point of sale software, mobile ordering, kiosk, especially important, right, with kind of where the world's gone with contactless. And then we have what we call campus IDs. So those IDs that students use to navigate in and out of buildings, but also contains stored value where they can load funds to actually transact on campus and also to some extent off campus, leveraging those funds. And most of that we've really moved to a mobile credential. So we've got about 1,750 universities, 12 million plus students that we service in some capacity in those solutions.
So 12 million students that you have some insight onto. I'm curious, this stop and start emerging from the pandemic. I mean, one of my in-laws is still in college, and it feels like, I don't know, trying to come back from winter break was definitely a difficult thing to do. As colleges try to emerge from the pandemic, what have you noticed in how that's affected students' spending habits?
Yeah, I mean, I think when you track the spending habits, tuition's always the largest. Obviously, it's about $40,000 over 4 years, and then comes rent and room and board, which is about $17,000. And you get into the personal spending, and I can't tell you have a deep knowledge, but I would say we've seen most of that trending pretty typical, in terms of dining, food being next. probably $400 a month or so that they spend either on a meal plan. But you do see definitely an uptick, no surprise, in, the Grubhub, Uber Eats, kind of restaurant delivery, meal delivery kind of expenses that have kind of, eclipsed what generally students have been spending on.
So Nancy, I always wonder about, like, in terms of college spending, what kids are spending on. What does it tell you, if anything, about what's going on more broadly in terms of consumer spending or the, kind of economic outlook? Or sometimes I feel like colleges are to some extent insulated maybe from what's more broadly going on in the economy, but maybe not so. So I'm curious how you see it.
Yeah, I mean, I would say, like I said, I think you see the trend in really convenience-based spending, right? Where they're spending a little more to have kind of contactless delivery, whether it's food or other items. I think that they clearly are spending less on kind of academic curriculum stuff, mostly because that's gone digital, right? That used to be a fairly high item for them, but that's lower. But they are spending more on kind of personal expenses, and I think a lot of that goes to convenience-based, and some of that's just kind of a trend with millennial, but some of that I think is tied to kind of COVID and just what's gone on with how we want to engage and make purchases.
And Nancy, I want to talk a little bit about Transact Campus and some of the deals that you've made recently, because you've announced some new partnerships with Apple, Google, Grubhub. Really, the list goes on.
Yeah, so when you think about our mobile credential, which today, again, it holds the stored value that a student would use to make purchases, but it's also what they use to kind of navigate securely through campus. And it was critical that we embedded that and integrated that first into both the Apple and Google Wallet. So that's just kind of table stakes in terms of having those kind of partners with the population that we serve. And then you look at we have point of sale software on campus, and we have mobile ordering, which is in kind of a closed campus environment, but wanting to extend that out to where they can leverage that outside of campus. At merchants, but also through a Grubhub, or we're speaking with Uber Eats, DoorDash, all of those.
Right.
Just makes sense in terms of how students really want to make purchases and transact.
Right, a broader array of offerings, and the more you can kind of load, it becomes kind of a full service. Hey, Nancy, thanks for the update. Nancy Langer, she's CEO at Transact Campus, on the phone from Phoenix, Arizona. Coming up, we're not going to talk bagels yet.
Not yet, but soon. I think we have to talk about the Supreme Court first.
We do.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week on this Tuesday. Carol Master along with Katie Greifeld. A lot going on. And, Katie, people might have missed that there was some stuff out of the Supreme Court today.
I absolutely missed it. So I'm excited for this segment.
Me too. All right, we're going to get to it with our own June Grosso, legal analyst and host of Bloomberg Law right here on Bloomberg Radio. First up, though, Charlie Pellet wrapping up the day for us.
Indeed, down day across the board. The Dow, the S&P, NASDAQ, all on the minus side after the closing bell. Lots of earnings. Let's begin with Palo Alto Networks. They're out of Santa Clara, California. Shares after hours up now by 5.6%. It sees third quarter adjusted EPS in the range of $1.65 to $1.68. Estimates on Palo Alto Networks have been for $1.64. Agilent boosting its adjusted earnings per share forecast for the full year after hours up by about 0.8%. What a day on Wall Street. Steep losses. S&P 500 index now in a correction as the imposition of sanctions against Russia over its Ukraine militancy put further stress on a market that has shown signs of buckling over the Federal Reserve's efforts to subdue inflation. Walter Todd is Chief Investment Officer at Greenwood Capital, and right here on Bloomberg Business Week, he offered up this advice for investors on days like this.
Try to step back and look at, try to maybe dig in on some individual names and earning stories that we're still getting despite all these headlines kind of whipping things around. And I think it can present opportunities for companies maybe that have just reported that maybe don't have that much exposure to this situation directly that are getting caught up in this macro trade.
And speaking of some of those names today, Home Depot after earnings plunging 8.9% today. Macy's after earnings lower by 5%. S&P fell 44 points, lower by 1%. The Dow down 482, down 1.4%. NASDAQ down 166, down 1.2%. 10-year yield 1.93%. Spot gold down 0.4, $18.99 the ounce. West Texas Intermediate crude up 1.4%. WTI 92.35 a barrel. The largest cruise ship ever built, Royal Caribbean's Wonder of the Seas, with 18 decks and can carry just under 7,000 passengers and another 2,300 crew members, has arrived in Port Everglades in Florida. Its first sailing will be in March. Royal Caribbean shares today down by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot going on, as we said, and that's true when it comes to activity at the Supreme Court. Several headlines crossing this morning over gay and speech rights, the Dakota Access Pipeline, and government-imposed COVID-19 mandates. So here with what you need to be aware of is June Grosso, legal analyst and host of Bloomberg Law and Bloomberg Radio. She's with us in our interactive broker studio. So a lot to get to. First up, I'm thinking energy markets because we talked about it so much because of the heightened geopolitical concerns because of Russia, Ukraine, the world at large. What do we need to know about this pipeline decision?
Of course, a lot of producers rely on the Dakota Access Pipeline. What this does, if the Supreme Court says we're not stepping into this, so that leaves it where the federal court below left it, which is that the Army Corps of Engineers has to do a more extensive environmental impact statement. They've been doing this impact statement since 2020, and they keep putting off the time when they're going to conclude the impact statement. So almost everything now depends on what they say. And this has been going on for 5 years. The Indian tribes, the Standing Sioux have been fighting this. And also you have to take into account that the Biden administration here asked the court not to take the case. So there's also politics involved.
And so the pipeline was just one of a trio of actions we got today. Another one was that the Supreme Court refused to consider requiring that government-imposed COVID-19 vaccine mandates include religious exemptions. That was an appeal made by a group of Maine healthcare workers. What was your takeaway?
I found this interesting for a couple of behind-the-scenes kind of reason. Well, first of all, this was expected because even though the Supreme Court said Biden couldn't impose a vaccine mandate or test rule, they have allowed the states. They said it's a dominion of the states, the health and safety and welfare of their people. So they have allowed the states to do vaccine mandates. And here, despite the fact that there was there was no exemption at all for religious reasons, and this is a court that's very much interested in religious reasons and usually, leans in that direction. Despite that, the court said Maine can do this. It doesn't have to have any, well, it actually didn't say much, if anything. It just said, no, we're not taking this case,
Right.
which means Maine can go ahead. What's interesting is that when this was, here's the inside intrigue that maybe is only interesting to me, but when this came up in October, 3 justices dissented. They wanted to take the case. So that means even now they couldn't get a 4th justice to agree to take the case because it only takes 4 justices.
Right.
So all that time and they couldn't get another vote there.
All right, so moving on to the one that you found most interesting today, and this is the Supreme Court agreeing to rejoin a divisive debate over gay and speech rights, accepting an appeal from a Colorado website designer who says she will not create pages for same-sex weddings. Talk to us about the significance here, June.
Yes, where actually the Supreme Court is going from wedding cakes to wedding websites. If you remember, a few years ago, there was the famous case. Everybody remembers it because it was a Colorado baker. It was called the Masterpiece Bake Shop case. A Colorado baker refused to bake a wedding cake for a same-sex couple. And the Supreme Court sided with the baker, but they did it on a very narrow ground. So they never answered the question of whether businesses have the right to refuse services to someone because of their sexual orientation and because the business owner's religious beliefs counter the sexual orientation. So in that case, it was decided on a very narrow ground. So now comes this web designer who, by the way, from what I understand, hasn't even started the business yet. So it seems like it's a test case. And she says, I don't want to design websites for gay couples.
Right.
So we have to remember that the Supreme Court taking this case says a lot. It says a couple of things. First, it says that they're willing to wade into this issue again, which is a culture wars. As you mentioned, it's a culture wars issue. Yeah. And the other thing is it's a different Supreme Court, even than the court that decided the cake shop case. It's a much more conservative Supreme Court. So taking those two things in mind, you say, why are they taking this? Another thing is that the 10th Circuit, the court below, ruled against the website designer. I keep wanting to say baker because it's so much like that case.
So much like it, yep.
So when does the Supreme Court take cases? They take cases when they want to reverse what happened below. So a lot is riding on this, and I think most people who look at it think it's going to go the way of the baker, and they're probably going to set some rules that don't favor anti-discrimination laws like Colorado has.
But is it freedom of speech?
It's also freedom of speech is involved here too, which was the same thing as freedom of speech was also involved in the Baker case. Freedom of speech and freedom of religion often intertwined in these cases because they're saying we have a religious right to say what we want. And this court is, and I just remind you that in the last gay rights, religious rights case, gay rights lost.
Yeah, I mean, people weigh in big time. They have very strong feelings. June Grasso, thank you so much. Catch June, Bloomberg Law at 10 p.m. Wall Street time on Bloomberg Radio. All right, back to World and National News and Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden says Russia has committed a flagrant violation of international law by declaring the independence of 2 breakaway regions of eastern Ukraine and also moving troops into the area. Because of that, Biden says new sanctions are being put into place.
We're implementing full blocking sanctions on 2 large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russian sovereign debt. That means we've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade in its new debt on our markets or European markets either.
Biden says in addition to those steps, sanctions are being placed on Russian elites and their families. He also noted Germany has put a hold on certification of the Nord Stream 2 pipeline. Biden wrapped up his speech with another plea for negotiations with Russia. That's if Vladimir Putin is serious. Jurors reached a guilty verdict on federal hate crime charges for the 3 white men convicted of state murder charges for chasing down and killing Ahmaud Arbery, a young black man who was out jogging through their Georgia neighborhood. Arbery's mother, Wanda Cooper Jones, came out of the courtroom with her hands raised in victory after the guilty verdicts were read.
I knew that we would get victory on the state level and in the federal level. I knew that from day one.
Wanda Cooper Jones says the Department of Justice was forced to try the killers of her son because of the pressure from family and supporters. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Okay, Nance, thank you so much. So this is what I love about the Bloomberg Terminal. It's where you can find a story about Kim Kardashian's hair fixer and, of course, Lloyd Blankfein, formerly of Goldman Sachs, the ex-Goldman chief. So first of all, let's talk about what is, I believe, the most read story on the Bloomberg, third most read story on the Bloomberg in the past 60 minutes. So the star witness in the bribery trial of former Goldman Sachs Group banker Roger Ng, we talked about this earlier, he testified that ex-Goldman chief Lloyd Blankfein met in 2009 with then Malaysian Prime Minister Najib Razak just ahead of a big bond deal, a few big bond deals for the country's 1MDB fund, and that the meeting came with an agenda.
And that agenda, of course, was to get jobs for the Prime Minister's 3 children at the bank. That is according to former Southeast Asia Chairman Tim Leissner. Leissner said it was all part of the push to get one MDB business. Again, Carol, we were just talking about this, how these trials, just amazing details emerge.
There's so much stuff coming out. I think there's another story about somebody who was blackmailed into getting his girlfriend, like buying an apartment. So, right?
Not a great look.
No. And Leissner 52, describing the lengths, he said his subordinate Ng and a tight circle of Goldman partners went to in order to loot billions of dollars from the Malaysian Wealth Fund. I mean, you know this story. It's been unfolding over the last few years. It's pretty wild. And the details that keep coming out in this trial, kind of you raise your eyebrows a little bit over it. Should we talk Kim Kardashian?
We should absolutely talk Kim Kardashian because her hair fixer created a $10 billion buyout bonanza. We are talking about Advent International led the purchase of Olaplex Holdings Inc. in January 2020.
I love Olaplex.
I've never used it. Now, now I'm tempted to. The power of a celebrity endorsement. But in any case, in little more than 2 years, the firm has pulled out nearly tripled its initial investments. It's sitting on a stake worth around $9 billion. If it can hold on to those gains.
But I gotta say, it came out of it feels like out of nowhere. It was endorsed by Kim Kardashian, but again, as you said, a $10 billion buyout bonanza. That is a lot to go from obscurity to that. All right, you're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Atlanta Fed President Raphael Bostic sees upward pressure on prices and wages abating. That headline crossing the Bloomberg Professional Service. Lots of earnings after the closing bell. Palo Alto Networks shares higher now by 6% after the cybersecurity company forecast adjusted EPS for the third quarter that beat the average analyst estimate. Agilent boosting its adjusted earnings per share forecast for the full year, shares down by 1.1%. Virgin Galactic is reporting revenue for the fourth quarter that missed the average analyst estimate, but after hours, Virgin Galactic shares flying higher. They're up now by 5%. Stocks fell today, pushing the S&P 500 into a correction as the imposition of sanctions against Russia over its Ukraine policies put further stress on a market that has shown signs of buckling over the Fed's efforts to subdue inflation. S&P down 44, down 1% again in correction territory. The Dow down 482, down 1.4%. NASDAQ down 166, a drop of 1.2%. 10-year yield 1.94%. Spot gold down 0.4%. $18.98 the ounce. West Texas Intermediate crude up 1.4%. $92.35 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie, thank you so much. Well, the future is schmear, so says our next guest website, who founded Better Brand. It's a company that's attracted investments from Reddit co-founder Alexis Ohanian, also the grandson of Wendy's founder, Dave Thomas, also actress Emmy Rossum, and more. Here with what she is doing to create the Better Bagel is Amy Yang. She's founder of the Better Brand, and she's on the phone in LA. Amy, nice to have you here with Katie and myself here on Bloomberg Radio. So tell us about your company and what you're up to.
Hey guys, thanks so much for having me. I'm thrilled to be here. To share a little bit more about Better Brand, we are, a food tech company and leading innovation in the refined carb space, right? So our mission is really create a world where, we can eat freely without worrying about weight gain or negative health consequences and without having to compromise on, what in taste, texture, flavor, or basically in any way. And, what better way to showcase that innovation and start than by turning the most carb-heavy food, a bagel, into the carb equivalent of, let's say, 2 slices of banana.
Sounds really good. Sounds really good.
Yeah, how exactly do you do that? Walk us through that process, because like you said, the same net carbs as 2 banana slices, same amount of protein as 4 eggs. That's what really caught my eye.
Yeah. It was a long innovation journey, and a lot of people refer to Better Brand as the beyond meat of carbs, right? And I think that's a really great way of thinking about it and understanding exactly what we had to do to get where we are in terms of the focus on R&D there. To dive a little bit deeper, it really comes down to proprietary ingredient formulation and process.
Okay, so I'm going to jump in. When you say proprietary ingredient formulation, it's a little bit of a red flag for me because I like to know what I'm eating. And increasingly, we're in a consumer space. We want to know how the things we wear, who produces it, where it's made, who's manufactured. Is it fair labor? Is it sustainable? When it comes to food, we're equally increasingly looking at that. So tell me
100%.
What you can tell us about that.
Yes, I 100% agree. And I would actually think that with food, it's even more important to be transparent, right? Because it's something that we consume and it affects, us, physically, physiologically, and everything in between. So when we were focused on, development of Better Brand, we're focused on completely clean label, non-GMO ingredients. And what I mean by proprietary blend is, all the ingredients are, wide listed on the label, but just in terms of the specialty ingredients that we've really been able to develop and use. But, again, completely clean label and non-GMO and transparent in every way. So to just kind of dive into that a little bit more in terms of specialty ingredient. So, the first ingredient on our ingredient list is a modified wheat starch, right? So what does that
A modified what?
Wheat starch.
Okay.
So what does that really mean, right? So it's an FDA actually approved source of fiber, and it's classified as an RS4 type resistant starch, which means it's actually indigestible in the upper gastrointestinal tract. So if you think about that, in the terms of consumption, right? So typically you have wheat starch that's digested by, an enzyme in the body called alpha amylase. And what that does is then, the refined carbs and sugars released throughout your body and drives up insulin levels, which, causes the body to store excess calories. And so what we've been able to do is actually modify that wheat to where that it's not penetrable from the amylase. So it's not it's not able to be absorbed by the body. It's indigestible in your gastrointestinal tract and therefore functions as a dietary fiber while retaining all the viscoelastic properties of the wheat. So, it still allows us to make all the foods that we crave in the way that we crave them, but, without any of the negative, health side effects or guilt.
And so, Amy, you've been compared to the Beyond Meat of grains, but some of the pushback that I hear about the Beyond Meat products is that the texture is totally off, that, it's not quite like eating real meat. And, when you're designing the Better Bagel, are you going for, something that's, if you bite into it, it's indistinguishable from a bagel, or are you trying for, maybe just a different, unique taste?
We're going for, when a consumer bites into that bagel, they feel the entire joyous experience of what it's like to eat a traditional bagel. There's never that feel of, oh, I have to compromise. But whereas, rather it's kind of that feel of, oh, wow, how is it possible that this entire bagel is the carb equivalent of 2 slices of banana? And I can, have 3 bagels in the morning if I want without ever having to worry or feel guilty or feel like I'm doing something, that's not great for my body. And so that was kind of our goal. And we're really, really excited about, kind of sharing the Better Bagel with, the world and kind of stemming forward from there.
If you do a Google search, you guys have been raising a bunch of money from certainly some high profile individuals. Where are you guys in terms of product to market? I'm just curious about what's the consumer side of this and the consumer ramp up side of this.
Yeah, so, I fundamentally believe as a founder that, if you believe in your product and your mission, then you should get the product out in the market as soon as you can, right? Because one, that's the only way you're able to learn and collect data and really run an efficient company. Two, it's important to take the consumer on the journey with you, right? As you build your brand and tell your story.
Forgive me because we're running out of time, but in 30 seconds, are you placing or who's placing orders with you? What are we seeing in terms of kind of the balance sheet in terms of top and bottom line, just very quickly?
Yeah, so we actually hit a $1 million run rate within 3 months of launch, and that's purely D2C at eatbetter.com. And it's really about this transformative vision of creating that world where, we can eat freely without compromise in any way.
Well, stay in touch and let us know how things are ramping up. Amy Yang, she's founder of Better Brand, on the phone from LA. Do want to head to Joe Matthew, host of Sound On, because we do have some headlines crossing the Bloomberg. Joe, Antony Blinken, Secretary of State, saying his meeting with the Russian foreign minister is not going to happen. It's canceled.
It is scrubbed, and that should tell us a lot, Carol, coming off our conversation a little earlier when we still weren't sure. This was considered a breakthrough last week when it was first agreed upon. They thought it might set the stage for a summit of leaders. Now this is not going to happen, which tells us a lot about what's really going on.
Yeah, interesting. Antony Blinken says it does not make sense to have a meeting with the Russian Foreign Minister, Sergei Lavrov. All right, Joe Matthew, host of Sound On, coming up next. Be sure to catch that. Katie Greifeld, thank you so much.
This was fun.
A pleasure always.
Of course.
All right, have a good evening. Everybody else have a good and safe evening as well. This is Bloomberg Radio.